We're joined now by Mike Pyle. He's Global Chief Investment Strategist at BlackRock. And I'm going to lead into something Becky's going to talk to us about. We're going to ask you about how to invest globally and what you're telling clients. At the same time, on any given moment, something like this can enter into the front. I just wonder how you do things based on this.
The headline again, a New York City school says that it will be closed on Tuesday after a suspected case of coronavirus was detected in its community. The SAR Academy and SAR High School, I guess, is the school that's going to be closed. They said that that closure was a precautionary measure and that it is in touch with the New York City Department of Health and following their guidelines. But to Joe's point, you're going to get headlines like this at any given point over the coming days and weeks.
Yeah, so our advice to clients is to recognize this is going to be an uncertain time, to recognize that it's important to keep an eye on the long term, of course, and to do two things. To stay sort of close to home in terms of your benchmarks, to stay invested. But also this is a moment when we have seen some very indiscriminate index level moves. That does mean that there are pockets of value opening up. And we also think that as a result, this is a moment when active managers can step in and find some of those dislocations and potentially deliver some.
We got as low as down 220 right after we first mentioned the school staying closed, and now we've improved from there. We've been talking all morning, Mike, about you need to know about supply and demand globally, and that, it's hard enough to figure one or the other out. But you got supply issues in China, supply chain, and then you've got, you don't know how much. Someone sent me a picture of an airport that looks like it's definitely different than in Atlanta. Yeah. It looks like there's not. So there may be some people staying home. I guess you need to know how long this lasts.
Yeah, when we used to talk about our outlook, we talk about there being three big uncertainties. One, how deep does the shock end up being? And I think there the question is, really around the geographic extent that the outbreak ends up taking on and the public health measures that have to be taken to slow that spread. Secondly, we talk about the duration, and there one place where we're really keeping an eye is China. They look to be more on the far side of the public health dynamic. They look to be trying to start their economy. Are they going to be able to restart it effectively, or are there going to be secondary, tertiary outbreaks that require them to take a step back and slow down the restarting of the economic activity? And third, we talk about liquidity. Like, this is really important. Companies, households are going to be facing cash flow challenges, liquidity challenges in different parts of the world. Being sure that fundamentally sound businesses don't have to close their doors because of cash flow challenges, an absolute priority for policymakers.
Markets have moved so violently in anticipation of a lot of these issues. Where would those pockets of value be, or how would you kind of rebalance into some of these moves?
Yeah, so one of the things we've advised clients to do is in factor space, look for some of the more resilient factor exposures. Places like value kind of clearly exposed to global supply chains, clearly kind of continue to be exposed to some of the downdrafts around the pressures that are to come. Places that have high quality balance sheets, high quality cash flows, a quality factor, places like minimum volatility. These are resilient exposures that we're suggesting clients lean into in an uncertain moment.
Prior to this happening, did things look pretty solid globally? And if it were to be transient or transitory, would we just get back to a good situation then?
So our view coming in was that this was not at all an economy on the brink of anything that looked pernicious. This was an economy with a globally and especially in the U.S., an economy that had a lot of momentum behind it in the U.S., an economy that on a global basis looked to be firming going into 2020, and we expected this was going to be a year that sort of saw growth stepping up. So the basic underlying fundamentals we felt were in a healthy place coming into the shock. And now the question for policymakers is, can they provide the support needed over the coming months to help us reaccelerate quickly out of this on the backside of the shock?
And I wonder, initially, if we don't just go back to where we were, but even go a little bit higher based on some catch-up, you need to know that too, right?
Absolutely, and I think it's fair to say that on one hand, in the absence of policy support, some activity is just going to be lost. There are going to be trips that aren't taken, restaurant meals that aren't consumed, what have you. But if policy can step in a very concerted way, especially on the fiscal side, that can help fill a lot of that gap.